What are the 4 strategies of sustainable investing? Now, this is more stock market related, and I'm more on the alternative investing side, but let's dig through this a little bit and talk about a few things. So what are the 4 strategies? We're going to name them out, so get a pen and paper so you actually know what we're going to be talking about, so you can start making some decisions and looking at what you've been doing historically in your investing choices. The second thing, we'll talk a little bit about how each of these work. And number 3, how do you align your profit and your purpose if you have one in your investing strategy? So what's fascinating is most people park and pray. They park with some financial planner, wealth manager, and they don't lean into being engaged in their own financial journey. So our goal at Integrated Wealth Systems is that you actually start leading your financial journey. You lead your entrepreneurial journey and then start really getting educated in your investing choices. So let's talk about the first 4. And since this is more stock market driven, I'm going to read some of this out. The answer to the 4 strategies, again, are ESG, which is environmental, social, or government factors in your investing strategy. Impact investing, exclusionary screening, which is a strategy to invest, and shareholder engagement. The final and last, shareholder engagement, is what I have done most of my life in more on the alternative sectors. Sustainable investing focuses on long-term resilience, not short-term hype. A lot of crypto projects are short-term hype because they're nodes, they're tokens, and they're within a structure of, is the project really going to become sustainable? A few that are really great that I've become more involved in is Rlink. It's a replacement, a blockchain replacement for Zoom, which is kind of cool. We're going to talk about some of those projects as we come to the end of this conversation. But let's jump into the next piece. Here's some facts. ESG-focused assets exceed 35 trillion globally, meaning it's an evaluation of environmental, social, or government factors that hugely impact that strategy or that investment. Sustainable funds outperform typically during market volatility because there's a lot of movement in the market, and long-term risk-adjusted returns matter more than the headlines. So what's interesting about that is the amount of emotion that happens because of the media. So if anything leaks, the CEO, a chairman of the board get into the news, it affects the stock. Environmental factors, social factors, and government factors affect investment and affect the volatility of the market on a regular basis. So how are you actually learning about this? Where are your levers? Where are your indicators? Are you actually reading? Are you leaning in? Are you park and praying? Or does any of this matter in your investing strategy? Higher net worth people pay attention to this on an ongoing basis. How much are you really paying attention? Let's dig into each of these a little bit more and how they could affect you and how you can make decisions around it. ESG integration. It evaluates the factors of environmental, social, government, focuses on risk management, and also blends into traditional portfolios. So a lot of you probably are doing that. When AI came out, a lot of you took that ride and you made some great returns. Now, if you didn't sell out and take profits, which a lot of you don't know how to do, unless you have that conversation with your financial planner, wealth manager, of when to take profits, when to not take profits. Again, are you going to let a software program do it for you? I let a software program that's AI driven do a lot of that folio structure for me, but it's different than being in a traditional firm into their softwares where there is not a lot of oversight. So this is up to you how you want to be engaged in your investment choices. While I have always leaned more towards the alternatives, is because control. You get control of buying the real estate. You actually get to run the real estate. You get to run the buy, the sell, the rent, the appreciation, the forced appreciation, which is a strategy we do. So I've always leaned towards those versus buying a REIT, which is in the stock market where there's fees, commissions, and everything taken out. I want to control all of the money in the asset. That's up to you, and we'll get to that a little more when we talk about the shareholder engagement. Impact investing and exclusionary investing. So impact investing targets very measurable outcomes. Exclusionary screening avoids harmful or really unknown industries, right? So they're usually on the leading edge. A lot of traditional investors won't even touch any of these industries. Like gas and oil still to a lot of people is an interesting industry. So when we say gas and oil, it's very different than say your financial planner saying, I'm going to go buy Exxon, Shell, Chevron stock. I'm talking about buying the well, the capital working interest of the well. Again, alternative, there's no person in the middle. It's you and the asset and an operator that's running a project. So it's very entrepreneurial, is a way to think about alternative investing. Exclusionary screening also focuses more on value-driven investing versus the return. Some of you actually, your values of the investment, green energy, renewable energy, things like that, are going to be more important to you than the returns. Some folks are all about the returns and a depreciation schedule. So before we get to the shareholder engagement, which is my wheelhouse and where I love to talk and where I love to live, more than the stock market and the traditional approaches, I want you to subscribe to this channel. There is so much content here. So subscribe to the channel, click the notification button. Every day, 5 days a week, you're going to get a new insight, new information coming into your listening device. Buy our journal. It's in the show notes below. And keep an annual journal. The journal is about what day you watched the video, what was the video about, what did you learn, and what are you going to do about it so you create an actionable plan. Put it in your calendar and start monitoring it. And start a conversation. Share this channel with 10, 15, 20 other people. The more people you have to talk about this content and get it immersed into your life. See, true integration means you can actually start having an intelligent conversation about it. Not just listening and agreeing or disagreeing with what I'm saying. It's actually your total engagement. Our goal is to have you do this with us. You lean in, you learn. It's your generational wealth plan. It's your legacy plan. It's your entrepreneurial venture. It's your wealth building journey. So you either lean in and actually be a huge participant, or you leave it up to chance. So we don't leave any of this up to chance. So shareholder engagement is my favorite because it is your ability to raise capital. It's more what I call Main Street versus Wall Street. So the first part of this conversation was Wall Street. This is about Main Street, buying your own real estate, buying the business, running the business, buying a franchise, buying the storage unit, buying the gas and oil well itself. There's an investment in water reclamation. When gas and oil is fracked and pumped out of the ground, there's a lot of water. So water is a huge part of that investment. It could be gas and oil. So you get actually 3 different kinds of cash flow out of the one investment. And with the bonus depreciation, with the big beautiful bill, which we love, this is just the cheat sheet of the big beautiful bill, that coming into effect 2026 provides 100% depreciation schedule. So how you invest off Wall Street is going to be vital to your tax liability and your tax plan as you move into year after year after year. We want to be part of that team that integrates your team, educates you about your choices, gives you pros and cons, and math equations. This is what it is, this is what it isn't, this is what you can have. And then you start learning to make your own educated conversations. You start investing in PPMs and prospectuses. You do have to be accredited to do these kind of investments, but now you're on the front line. There's some investments as we look into 2026. As you look at investments into 2026, do not leave behind the big beautiful bill and the capability of what shareholder engagement types of investments are going to get you. It's you on the street level, off Wall Street, not in the stock market. Those of you that want the stock market, I'll give you a link to iFlip, which is how a lot of us invest, which is a software, but it's AI driven. It was designed by a gentleman who ran the Deutsche Bank of over $600 billion, took the software that the big guys, the Wall Street guys get, and made it a viable software for us. AI driven, takes you in and out of the market so you don't lose. The most I've ever lost on a downturn in 2022 was a big downturn. I lost 2.87. It put me out into cash. As the stocks in the market dropped, I bought back in. The software bought me back in, and I took the ride. A lot of your planners are going to say, it's okay, you're in it for the long haul. It's okay you took a 30% loss. I don't want to take a 30% loss. I don't want to take a 10% loss. I don't want to take a loss. I want to take the most minimal and highly risk mitigated investment opportunities. So if you have any questions at all about this conversation or any conversation that we have here at Integrated Wealth Systems and on this channel, The Millionaire Maker, go to askloral.com. We're there 24/7. Ask questions, make requests, and let us help you make a plan. So as you're in 2026 and beyond, you're in control. You're not abdicating control. It's up to you. We'll be back tomorrow.